Students, welcome to Purna's Commerce classes. In the previous video, we have seen the basic introduction to the concept of hire purchase and installment system. In this video, we try to understand the accounting treatment for the hire purchase transactions. For that, we'll try to understand one basic example. That means how this hire purchase system work. For this, we'll try to understand one example. Let us take Mr. Motu. Mr. Motu would like to start a business called goods transport business. Goods transport business. For that he needs Ashok Leyland tempos, trucks, vehicles. Okay. Now he has two options. First one, he may take these tempos on rental basis instead of buying them. He may take these things on rental basis. And second option, he has to buy the new vehicles. He has chosen the second option to buy two new tempos. Okay. For that, he approached the dealer. The dealer is Mr. Patlu. Mr. Patlu is the dealer of Ashok Leyland tempos. Now, there is some conversation happened between these two people, Mr. Motu and Mr. Patlu. What is the conversation? We'll try to understand. Look at Mr. Motu would like to buy two tempos, new tempos, but he does not have sufficient funds to pay full amount. He does not have sufficient funds. Okay. Mr. Motu said, Mr. Patlu, I will pay the total amount in installments. So Mr. Motu said this. Mr. Patlu also accepted for his proposal. And both the people, Mr. Motu and Patlu, they made one agreement to include some terms and conditions. See, whenever two parties entered into an agreement, compulsorily there are some terms and conditions. So now we see the sample format of this hire purchase agreement. Look at. Have a look on this sample format of hire purchase agreement. And this is a sample format of hire purchase agreement for purchase of motor vehicle. See, next time whenever you are buying two-wheeler or four-wheeler on by taking loan, just go through the documents. Before signing on the documents, just go through what are the terms and conditions there in the document. So there you can find the word hire purchase agreement. Okay. So in the Google you can search, you will find sample format of these hire purchase agreements. Okay, students, now come back. Parties for hire purchase agreement. If you remember, for bill of exchange, there are three parties: drawer, drawee, payee. For consignment, there are two parties: consignor, consignee. At the same time, for this hire purchase system agreement, there are two parties: one, hire purchaser and hire vendor. To put it simple, hire purchaser is nothing but hirer, the person who purchases the goods, and hire vendor, the person who sells the goods. Okay. Next, accounting treatment for hire purchase transactions in the books of hire purchaser and hire vendor. Okay. If you observe from hire purchaser point of view, it is asset. From hire purchaser point of view, it is asset, and from hire vendor point of view, it is sale of goods. Okay. So we should record the entry as purchase of asset from hire purchaser point of view, and from hire vendor point of view, we should record the entry as sales. Here now. For proper accounting record, we should identify the following first. See, if you want to record the entry, first you need the date of transaction. After that, the account debit and the account credit, and the amount debited and amount credited. Yes or no? Here also same. Look at it. First, we should identify the date of purchase of the asset. On what date we are purchasing the asset. Next, cash price of the asset. What is the meaning of cash price of the asset. This word is very, very important throughout our hire purchase accounts. Okay, cash price of the asset. See here in our example, Mr. Motu is buying the tempo on hire purchase basis. Instead of purchasing this tempo on hire purchase basis, if you pay the total amount at a time, then what is the cost of this tempo? That is called cash price of the asset. Okay, next up, the amount of down payment. As we are buying the asset on hire purchase basis, initially we should pay some down payment. Okay, next, amount of loan borrowed. See, let us take for example here, in our example, who is hire purchaser? Mr. Motu is our hire purchaser. Next, who is our hire vendor? Mr. Patlu. Okay, now cash price. Let us assume rupees 10 lakhs. Rupees 10 lakhs each tempo, each. So how many tempos Mr. Patlu would like to buy? 2. But that means total cost 20 lakhs. What is the cash price of the tempos? Each tempo 10 lakhs, 2 tempos 20 lakhs. That is the cash price. If Mr. Motu would like to buy this asset by paying total cash, he has to pay 20 lakhs. But Mr. Motu would like to buy on hire purchase basis. So initially, actually he has to pay 20 lakhs. But he is not paying total amount. So initially he has to pay some down payment. Let us assume initially he is paying some 3 lakhs rupees down payment. Actually, what is the cash price? 20 lakhs. Initially he is paying some down payment 3 lakhs. Now tell me, what is the remaining amount payable? 17 lakhs. 17 lakhs. And for that amount is nothing but loan amount. This 17 lakhs we have to pay in installments. Now you people tell me, there is a concept of interest. Why? Because we are borrowing loan. We are borrowing. When we are borrowing, compulsorily we have to pay interest, right? Now, rate of interest. Let us assume the rate of interest is 10% per annum. Rate of interest is 10% per annum. We borrowed 17 lakhs and rate of interest is 10% per annum. Number of installments. Let us assume we enter into 8 years into yearly 12 months. So total 96 months. Total 96 months. Okay, right? Next, amount of installment. How much we should calculate, and date of payment. Let us assume 1/4/2023. 1/4/2023 onwards we should start making payment. Our first installment date is 1/4. Okay, right. Next, date of closing the books of accounts. Let us assume the date of closing the books of accounts are 31st March 2024. 31st March 2024. This is the date of closing the books of accounts. Assume time being. Okay. So these are the various details you should know. If you observe, all these details practically available with your fingertips. Why? Because cash price, already in the quotation they mentioned the cash price. Down payment, you know, you are making the payment, and loan also. If you observe the loan sanction letter, supporting documents, loan sanction letter, at the same time loan repayment schedule, they will issue loan repayment schedule. That schedule contains number of installments and what is the installment amount. Out of this installment amount, what is the principal amount, what is the interest amount, and after making each installment, what is the closing balance. All these details you can find in loan repayment schedule. But in the examination problems, you cannot get this loan repayment schedule. So that you should calculate most of the details. What are those details? This is very important thing which you need to calculate in the examination problems. Cash price. The same thing we'll call it as cash down price. Cash down price. Next up, interest portion also you have to calculate. Rate of interest they give you, we should calculate interest. So there are some calculations which we should do manually in the examination problems, but practically you need not to do all those calculations. Clear everybody? Right. Now look at here. So like this we need some details. Rate of interest, number of installments we calculated 96, and amount of each installment, date of payment, date of closing books of accounts, method and rate of depreciation. As we are buying asset, on asset we should calculate depreciation, so that the method and rate of depreciation. Clear everybody? Next, after knowing all these things, then only we enter the transactions in the books of accounts. Okay. Next, payment of installment. The installment may be paid either monthly or quarterly, once in a 3 months, or half yearly or yearly also. Understood everybody? Here Mr. Motu agreed to pay the amount monthly. Clear everybody? Now practically, suppose how we should calculate the repayment schedule manually, that means in the computers. Shall we see that? Okay, so in the Excel sheet we try to learn how to prepare this loan repayment schedule, EMI calculator or installment calculator. Here observe, already I have calculated this. Again we see how to calculate the same thing. Now I am taking another sheet. Right, now look at it. Okay, first, what is cash down payment? Cash down payment is 20 lakhs. Okay, 20 lakhs. 2 into 20 lakhs. Now, how much down payment we are paying? Down payment. In our example, the down payment is 3 lakhs. Okay, right. So, what is the loan amount? Loan amount is 17 lakhs. Okay, 17 lakhs. Now, what is rate of interest? Number of installments. Number of installments. Okay, how many? 96. 8 years, 8 into 12, 96. Okay, next, rate of interest. Rate of interest is, look at it, 10% per annum. 10% means 0.1 per annum. Now convert it into months, divided by 12 months. So 83 paisa per month. Now calculate EMI, equated monthly installments. So for this we have a formula called PMT. We have a formula called PMT. Now it is asking rate. So interest rate, comma, NPER, that means number of payments, 96. Number of payments, 96. Number of payments, 96. And it is asking present value, that means loan amount, comma, future value we don't know, make it 0. So enter. Here you are getting minus, that means every month EMI how much? 25,796 rupees 8 paisa. Here you are getting minus, so that loan amount make it minus. Okay, now that means every month how much amount you have to pay? 25,796 rupees. This amount includes principal portion and interest portion. So why should we divide principal portion, interest portion? See, interest is expense for us. So every year the interest expense should be transferred to the profit and loss account. That's why from each installment we should separate principal portion and interest portion. Now we prepare the amortization schedule or repayment schedule. See, number of EMI, okay. Next, number of EMI will take total how many? 96, right? Yeah, so here I am taking till 96, I am dragging here 96, okay. Next, EMI date, second column EMI date. Okay, EMI date. So we observe that our EMI starts from 1/4/2023. Next, enter one more date, next EMI 5/2023. Now you can drag, yes, till 96. So that means our last EMI date is 1st March 2031. With that 8 years is completed. Okay, fine. Next one. Amount due at the beginning of the month. Okay, at the beginning of the month, right? Next one, EMI is how much? Okay, next interest portion. Out of this EMI, how much is interest portion and how much is principal portion? I have to divide principal portion and the balance, closing balance. So these are the column information I need. Yes or no? Okay, right. Now how should calculate this? Very simple, students, very simple. Just a minute. Okay, fine. Now look at what I am doing. First take what is the amount to due at the beginning of the month? Total loan amount is due 17 lakhs. Yes, 17 lakhs. I am taking here 17 lakhs. Right. Now, what is the EMI amount? EMI amount is 25,796 and it should not be changed. It is fixed. So that what I am doing, I am freezing this cell. Okay, fine. Right. I am freezing this cell. Now drag it because this should be fixed. Throughout your loan, this amount should be fixed. Right. Over. This is completed. Now look at how interest is calculated. Interest is always calculated on the amount due at the beginning of the month. So I am calculating interest. First EMI interest is due on 17 lakhs. Okay, 17 lakhs into what is the rate of interest? We have 83 paisa. That's it. That means 14,166 rupees is your interest portion. How you will get principal portion? From EMI, deduct the interest. You will get principal amount. Here I am taking only 2 decimals. Right, here also 2 decimals. Fine, over. Now, how do you get the closing balance? Actually, beginning of the month, what is the loan outstanding? 17 lakhs minus, out of that, how much principal portion paid? Only 11,629. So the balance is remaining 16,88,370 rupees. Understood? Next. So this will become the opening balance on the next month. So this is the opening balance. Fine. So EMI will not change. Interest, same. How we calculate? Interest rate is fixed. So freeze this. Interest rate is fixed. So freeze this first. Yes. Now you can drag. First, I'm dragging this. Next, I am dragging this. Now look at the end of 1st March 2031, your loan outstanding, your loan will be closed, 0. So this is how we prepare our repayment schedule. Okay, now look at the end of 96 months, what is the total interest that we are paying? Yeah, this 17 lakhs is loan amount, and this 7,76,423 is interest amount. Now you people tell me, actually, what is the cash price? Cash price of tempo? 20 lakhs, 2 tempos. But whereas if you pay cash, then 20 lakhs. But here we are buying on hire purchase basis. So here we should calculate hire purchase price. Hire purchase price. If you pay total cash, then cash price. But you are not paying total cash, so that you have to pay the same amount with some additional amount called interest. So this hire purchase price includes cash price plus interest. Cash price plus interest. Understood, everybody? Now tell me, what is cash price? 20 lakhs. 20 lakhs. Plus, what is interest portion? 7,76,423. Now tell me, what is the total hire purchase price? 27,76,000. Just a minute. 27,76,423 rupees is the total hire purchase price. So hire purchase price includes cash down price of the asset and interest portion. Hope you understood. These things we should calculate manually in the examination problems. That's it. Practically, you will not face any difficulty in calculation of this EMI and hire purchase price, cash price, nothing. In the Excel, you can calculate within fraction of seconds. Okay, but manually you should calculate this hire purchase price, cash price, and this interest amount, and at the same time, how much is interest portion? Look at here. How much is the interest portion? How much is the interest portion in each installment? How much is the interest portion in each installment? All these things we should calculate in the examination problems manually. If you can understand this calculation and manual calculation also, you can understand easily. I hope you understood this, students. Okay, now we jump into journal entries.